Welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions, ask them in the comments of the live feed below. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. During today's live session, we will be running a poll, so please do engage with that and I'll reveal the results at the end. For those of you who haven't seen me before on Ask the Expert, my name is Judith Dugdale. I am a chartered accountant based in the northwest of England. I work for a large independent firm of chartered accountants and business advisors called MHA Moore and Smalley. We cover Cumbria, Lancashire, Merseyside, Greater Manchester and also Derbyshire. We look after all manner of businesses, from large multinational companies, subsidiaries of overseas businesses, all the way down to small consultants, self-employed, and anything in between that. In terms of the services we offer, we help them with the generic compliance work, such as personal tax returns, corporate tax returns, annual accounts, audit, but we also do some outsourced payroll, some outsourced bookkeeping. We have a team of independent financial advisors and a corporate finance team to help businesses who are looking to grow or sell or raise significant amounts of finance. I head up the digital solutions team at MHA Moore and Smalley, and my role there is to look after clients who use cloud accounting software. Our team is split into two areas. One is to help new businesses set up bookkeeping systems using QuickBooks Online and associated apps, and we do the setup, the training and ongoing support for those clients. The other part of my team is where we do the ongoing support in terms of annual accounts, management information production, strategic advice, and helping them project and plan for their future. So by the very nature of the businesses that we deal with, and they happen to be in the main quite small businesses, so we will deal with startups up to say £1-2 million worth of turnover in the main. I obviously deal with an awful lot of the new businesses to the firm who need help in setting up bookkeeping systems, but also those who are right at the very start of their business journey and looking to set up their business. So in the last 12 months, we've seen a marked increase in the amount of inquiries we're getting from people who are looking to set up their own business. And I thought it might be worthwhile, before I start taking any of your questions, just running through some of the things to consider if indeed you're at the start of that journey and you're not quite sure whether you should be trading as a sole trader, a partnership, or whether you should be a limited company. There are various things that you need to consider, and it's not a one-size-fits-all. A lot of it comes down to the risk involved in your business, the type of business that you are, the size, the amount of profit you think you're going to make, the level of turnover you're going to have. Also, making sure that you're comfortable with the requirements that come with whichever type of entity you decide to set up. So just to touch on those briefly for you, in terms of risk, what I'm talking about here is risk to you as the owner of that business. A lot of businesses are fairly straightforward to set up. If you think of, say, a consultant who is effectively just selling their time and producing reports, or maybe working on websites and building those, the risk to yourself is fairly small in terms of it's your cost, it's your time. If, however, you are, say, into manufacturing, or maybe you're doing online sales and you're having to buy in stock, you've got a risk there that you will more than likely have to pay for some of that stock first and then sell it on. Furthermore, you could even be in a sector where your customers don't pay you immediately. They may be paying you 30, 60, 90 days down the line. And unfortunately, you've got to then bridge the gap of buying those items of stock or whatever it might be, equipment that you need, before you're getting paid. So the risk for you as an owner is that when you come to have to pay any of your bills, you don't have enough money. As a self-employed person, if you can't afford to pay all your debts as they're due, the suppliers, be them people that supply you with goods, be it HMRC, be it the bank, they can come and try and take your personal assets to recover any money that's owed to them. If you trade as a limited company, you have what's called limited liability. So assuming you don't give any personal guarantees to anybody, if your business unfortunately gets to the point where it can't fulfill paying all the bills that it's got and the debts that are due, the company pays what it can, and then the company is folded, liquidated, and you as a director walk away from that business and you keep all your personal assets. So that is where the risk element really is important to assess whether there's going to be any chance that in the future, if something goes wrong, for example, there's a Brexit again, obviously not a Brexit, but a similar sort of world-changing business difference. If there's another COVID pandemic or a similar pandemic, if that's going to massively impact your business and your ability to bring in income to pay your debts, then actually setting up as a limited company from day one may be the right solution for you. The other things I said to consider is the amount of income and profit. So if you're going to launch a business that's going to be very fast growing and making lots of money, then a limited company is probably the best route for you so that you can account for things in the most tax efficient way. However, if it's going to be quite a small business to start with, maybe you're expanding on a hobby whilst also working elsewhere, then a self-employed is a really quick and easy way to set up a business and get running. In terms of the compliance side of things, self-employed, if you want to set up as a sole trader or even set up as a partnership with one of your friends or a business acquaintance that you know, setting up in that way is very simple. You go to gov.uk. If you just enter into in their search column about setting up your own business, it tells you how to do it. It's quick, it's easy, and there's no cost to you whatsoever. However, if you want to set up as a company, you need to set up a company at Companies House. You need to ensure the name that you're using is available before you start trading. And then once you are set up, you have to do what's called a confirmation statement on the anniversary of every year since you set up that business. As well, in terms of compliance at year end, as a sole trader or a partner, you do produce your accounts, but they don't have to be in any sort of statutory format. And you will add them the details of the income and expenditure and the profit made onto your self-assessment return, which is filed every year in January. If you're a limited company, you will have to do statutory accounts and file them at Companies House. They have to be in a prescribed formula, which generally means you'll need an accountant to help you produce that information and get that filed for you. As well as the filing of the Companies House accounts, you've got to file your corporation tax return and pay corporate tax over to HMRC. Again, these forms need to be filed in a specific format, and quite often that's not something that people would have the software for themselves, so again would need an accountant to help them with that. The most important thing I can tell you is that you really do need to get some professional advice right from the very start. So firms like MHA Moore and Smalley, where I work, have people like me who you can call and ask for a no obligation meeting to discuss you setting up your business. It's not, as I said before, it's not a one size fits all. So it's really important that you don't just do what a friend recommends or that you saw another family member do. Really important to speak to an expert, talk to them about what it is you're wanting to do. They can assess the risk that's involved in your business, and then they can advise you on the best way to set up your business. They can also talk you through the best way to take money out of that business, be that salary and dividends if you're running a company. Bearing in mind, you can't take any dividends until you make profit. Or as a self-employed person, just explain to you how the money you take is not necessarily what you get taxed on. Self-employed person, you get taxed on the profits your business makes, not what you necessarily take home and spend yourself. So there's lots and lots of things to consider when setting up a business. And one of the really important things is getting the right software. So QuickBooks Online is a fantastic tool for new small businesses setting up, as it's really simple to use. It will bring in all the information you need. You can do everything on the go if you need to, or if that suits you. You can link through to various different apps, and if you're selling online, link through to Shopify, PayPal, lots of different bits up there for you, which will really make the bookkeeping side of things so simple. And if you have that in place, it will make it so much easier for you to make the right decisions as your business starts to grow. So I think that's enough of me talking about setting up a business. Time to take some of your questions. So I've had a question through from Shelley on Twitter, a direct message. And Shelley says, I'm setting up my first limited company. I'm super confused about the best ways to pay myself, especially as I know cash flow will fluctuate. What are my options and what do you advise? So Shelley, the first thing which I've very briefly noted on before is that as a director and a shareholder of a limited company, you can pay yourselves dividends, but only if the company has made enough profit after tax to pay those dividends out. And that's where it's quite important to have up-to-date information in your bookkeeping software. So, for example, if you were to use QuickBooks Online, you would be able to run a profit and loss account each week, each fortnight, each month, and that would show you how much profit you are making. You can put an estimate in for corporation tax, which is typically 19% of your profits, and whatever's left, you could take as a dividend. Now, in the early months and years of a business, they don't necessarily always make profit, but that isn't anything to be necessarily really worried about, as long as you've got the cash in there to fulfill the requirements of the business in terms of paying for goods and paying any debts that are due. Making profit isn't the number one, I suppose, target from day one. It's about generating enough cash to get the business going, and then the profit should flow. So in those situations, what we quite often do is put a director onto a pay-as-you-earn scheme. So effectively, you become an employee of your company and you are paid a salary through that company. You can pay a salary to yourself even if you're not making a profit. And it might well be that we, or whoever your advisor is, advises a set amount for you to pay through your payroll. And you may not necessarily always have the cash to pay that. So what would happen in that circumstance is that any money you couldn't pay yourself goes and sits on what we call a director's current account. And that balance would sit there and grow until you've got the money in the bank to pay yourself what you would due. Now, in terms of the amount of money that you would pay yourself as a salary, that is completely dependent on your personal circumstances in terms of what money you might need to meet requirements for your home, such as a mortgage, gas, electric bills. It's also dependent on how much money the business has to be able to pay you, and also looking at any other income streams that you might have. In a very perfect world, there is what we call a director's basic salary that we recommend a director takes, which is then topped up by dividends. But that's obviously not always the case when a business first sets out. Worst case scenario is if you need to get some money out of the business, but you can't yet take any dividends, you could take a loan from the company. And as long as that is repaid within 9 months of your first year end, there are no tax implications for you or your business. But please do get some advice from an accountant on that, just to make sure that you don't fall foul of any tax laws. I've got another question through from Twitter direct message, and this is from Jamie. And Jamie says, I know the furlough scheme has been extended to September, but my business took such a hit, I am still unsure if I have enough money to bring on my full staff now. Is there any additional support I could be looking for, or should I scale my operation down? So, Jamie, good news in terms of the furlough scheme being extended to September. So there is support there. If you can't bring your full staff back, you can continue to furlough some of them. And obviously it's a flexible furlough scheme that we are working in. So you could bring them all back part-time, or you could decide to just bring a couple of members of staff full-time and leave other members of staff fully furloughed. In terms of other support that's out there, unfortunately, the business bounce back loans and the CBILS have now ended, but there are some recovery loans that are out there, which if you do a quick Google, you'll see various bits there. It's also worth checking with your local council to see if they've got any discretionary grants available at the moment to help businesses like yours. I'm not sure which sector you're in. So certain sectors have still got some funding available to them, particularly hospitality and leisure are getting things like rates relief still for the first few months. So look into that and make sure that you're not paying any rates that you don't need to. And in terms of the question of whether you should scale down your operation, it really does depend on how quickly things pick up. You might want to do almost like a phased reintroduction into whatever sector you're in, and maybe a phased reintroduction of your staff, offer them small amounts of work, furlough them for the rest of the time. If you haven't already done so, I would have a little look at doing a projection. So look at where your cash flow is now, have a sort of best estimate of what sales you think you might be able to get in, and on the basis of generating those sales, what your costs would be. So looking at how many hours people would work and what the cost is to you that you can't reclaim on furlough, and look at other costs such as rent, rates, gas, electric, all those things, and have a little look at what that level of profit or loss looks like, and then you can adjust your plans accordingly. And again, just as I said previously, do speak and engage with your accountant. This is where our expertise is, so we can sit down and go through the numbers with you, and we can look at when you think debts are falling due, and whether there's anything out there that you could do to delay some of those payments. HMRC have been incredibly helpful at the moment in arranging time to pay agreements for VAT returns, personal tax returns, corporate tax bills. So there is some help out there. You probably need a little bit of one-to-one advice that's applicable directly to you and your circumstances. So pick up that phone and have a chat with your accountant. The next message has come through from Amanda, and this is a Facebook comment. Amanda says, what happens if you become a limited company and have a bounce back loan as a sole trader? Do you pay the bounce back loan straight away? So Amanda, this is actually a query we've had from a few people recently, and it's gone both ways. So it's been where a limited company has taken out a bounce back loan, but the business now is changing, and the owners are thinking of maybe closing one business, starting up again as a sole trader in a slightly different way. The first thing is to speak to your bank. What they quite possibly would do, if it's the same sort of business and you're doing what we call an incorporation, which is where the limited company buys all the assets off the sole trader, it will be likely that they will just move that bounce back loan into the limited company name. If it's a completely different business that you're setting up and you're effectively finishing that sole trader, then you will need to speak to them about what happens with that business bounce back loan. Obviously, business bounce back loans are repayable over 6 to 10 years, depending on what you asked for at the bank at the time. So if you can move it into a limited company, it would follow that payment plan, I would have thought. Like I said, you do really need to speak to your bank manager on that. If you don't have a bank manager, because potentially you're fairly small, you will need to ring the business banking helpline, and somebody will be able to help you with that question. And again, maybe speak to your accountant and just check to make sure that the setting up of a limited company, if it is an incorporation of the business you already do, that it's done in the right way and it's done properly, so that will give the bank a bit of comfort that they will get paid. We've got a message from Paul, a Twitter direct message. My business hasn't been able to operate properly throughout lockdown. As things are now opening up again, is there anything I should be prioritising as we start to gain a larger cash flow again? Obviously, Paul, I'm not quite sure what business you do or what you're operating, but a bit like my message to Jamie earlier is you really need to keep a tight control on the cash flow, using, for example, QuickBooks to run reports at the end of each week to see your levels of sales, your costs, and the profit that you're making, but also, importantly, looking at cash. Making sure that you've got an idea of what is coming forward as well. So it's all well and good looking at how much money you made last week, but you need to know what bills are yet to come. And if you put in all your purchase invoices into QuickBooks, you'll be able to run a report that shows you all your outstanding creditors. And then you'll be able to say, right, well, I've got £10,000 in the bank, but actually, according to QuickBooks, I've got all these bills I've not paid for yet, which add up to 3,000. So actually, I haven't got what I think I've got available. I've got a bit less. I would also recommend, if you're VAT registered, to start putting to one side 20% of all your sales, so that VAT amount is safe in another account, so you don't spend that. It would be really good practice as well if you put away another sort of 19% of what you're making in terms of profit, ready for your tax bill later on. And then that is almost like a slush fund that if you desperately need to dig into, you can dig into the corporate tax fund that you've got to one side. But other than prioritising money for those circumstances, it depends on your business. You may need to invest in some new equipment, or if say you're a bar or a restaurant or a hotel, you might need to do some refurbishments before you fully open inside. So maybe looking at how much that will cost and building in the repayment of whatever that figure is into your figures. And I would maybe just really set up a nice plan. Again, speak to your accountant, see what they recommend. But we do, with a lot of our clients, a rolling 12-week cash flow forecast. QuickBooks inside it now has a sort of a cash flow planner, which is dependent on the information that's already in QuickBooks. But it's a good starting point, and that could be a good tool just to try and plan where things are going. So hopefully that helps a little bit there. Mandy on Facebook has asked a question. She's a brand new customer, which I presume is brand new customer of QuickBooks, and she needs all the help she can with QuickBooks. So she has no idea what she's doing with the information she's input from her bank statement. And when she tries to reconcile it, it doesn't add up and match. She now has had the account for a week and she's still no further forward. Can anyone help and talk me through it? So a couple of things here, Mandy. One, within QuickBooks itself, there is an find an accountant function. So if you don't have an accountant, I would strongly recommend you go through that area and find an accountant in your area that is a QuickBooks expert. They will be able to have a look at what's happened on QuickBooks and suggest a way of correcting anything that's wrong and also providing you with a bit of training. Secondly, go onto the Intuit webpage for QuickBooks and have a look at their free training that they give. So they have free onboarding sessions that are webinar style. So you can sign up for those and get some support through QuickBooks Direct. Again, if you do reach out to an accountant that's on the accountancy panel with QuickBooks under that Find an Accountant, a lot of accountants have direct access with QuickBooks for onboarding sessions as well. So they could direct you to one of their onboarding sessions, and those sessions are free as opposed to one-to-one training. So they're really useful and they'll really help. If there's a specific question that you're really concerned about, something that you really want to just get sorted, there is the chat function within QuickBooks Online that you could type in some of the queries that you're having, and they will come back with the best steps forward. The other thing I would just say is if you go to the QuickBooks YouTube channel, there are hundreds of videos on how to do a bank rec, how to match off bank feed items, how to add a sales invoice, how to receive payment against one, how to add a purchase invoice, how to make a payment against them, how to run reports. There are hundreds of videos. So have a go at navigating through them. But as somebody who engages a lot with small businesses on QuickBooks, and we have two in-house trainers, I can't recommend enough speaking to an accountant to get their input as well, because they can really tailor how you use QuickBooks to your business. We've got a Facebook Messenger question, and that is, online sales have really helped me through lockdown, but I can see that it's starting to dwindle a little. Now restrictions are lifting, I can't decide whether it's worth opening my brick and mortar or invest the running costs of it into promoting the online store. What are the main things I should be considering before I make this decision? So yes, online sales have gone through the roof in the last 12 months. We have an immense amount of clients that deal with all different types of retail online sales, as well as selling online websites and things like that. And across the board, things have gone massively increased, which is fantastic. But obviously that trajectory of increased sales can't continue for forever, unless possibly you're Amazon and you've got all that money. Continuing, the big thing about online is continuing to promote your online store. So you've already picked up on that. That is a really key area. The way that Google works and social media and all that side of things is that if you stop promoting and you stop doing your AdWords and you stop doing blogs or whatever it is you've been doing, you fall back down the Google ratings, so that when people are searching for whatever it is that you sell, you will no longer be towards the top and they will find it hard to find you. It isn't a case of once you're up there, that's it, you're there. You've got to continually promote. So I would say if you're seeing quite a lot of increase in online sales through any sort of investment in promoting it, then it's probably worth doing that a bit more. But again, it's worth speaking to some marketing experts to get an idea of what they think is the best place to spend your money, because they might turn around and say, actually, your social media work is fantastic. You don't need to spend any more money on that, but actually you need to do a few blogs on your website to get that going. Or maybe you need to update your product lines and make it look like there's some new stock on there. There's lots and lots of different things that they could recommend, which may help instead of you focusing on the same thing you've already done. In terms of opening up brick and mortar, it's really hard for me to advise, because obviously I don't know what it is that you're doing and I don't know the area where you're based. Local high streets have seen a big increase as things have started to increase. Things have started to open up as people are taking that decision to shop locally. But I can't say whether it's the right thing to open up. You'd have to do a little bit of market research in your area just to see how local businesses are performing since they've been allowed to open in the last few weeks. So the last question for today is from Greg on Facebook Messenger. And he said, I've been using QuickBooks Online for a while now and it's been super helpful. However, it's got quite messy quickly. Sometimes I find it hard to find what I'm looking for. Have you any pro tips on how to keep it organised? So Greg, my first tip is keep on top of it. Ideally, if you can go in every day and clear off your bank transactions, that is absolutely brilliant. But try at the very least to do that on a weekly or fortnightly basis, and worst case scenario, every month. The more you keep on top of it, the easier it is for you to understand. In terms of keeping things organised, it's quite useful to use things like the receipt capture tool on your mobile and get those invoices in that you can then match off against the payments as you go through the bank. There are tools out there now that accountants have where they can assess how good your bookkeeping is. So you can speak to an accountant and ask them to do a quick digital review for you and recommend anything that could be improved. The other thing is, I guess, is to keep up to speed with all the changes within QuickBooks, because there's so much new features that come through that will really benefit you. It is quite important to keep up to date with those as well. So I guess the top tip is to, the bit where we find errors are where people have matched off bank transactions, but not necessarily matched them to entries that they've entered. So a really quick way to see whether you've maybe got things in twice is to go in to do a bank reconciliation. And that's in the chart of accounts, in the accounting area, where your chart of account comes up. There's a reconcile tab at the top of there. Go in there and reconcile your bank and you will see if there's any duplicated items. And finally, the other thing I would say is don't forget the search tool function right at the top of QuickBooks. There's a little like magnifying glass next to help. If you go into there, if you type in, say, telephone or whatever the expense code is you're looking for, it will bring you up just the breakdown of things in those expenses. And that's quite a good top tip. I'm sorry, that's all we've got time for today. Just quickly, the poll results are in. We asked, does your business have an accountant? And 100% of you said yes. So that makes me very, very happy, because it really, I can't stress it enough. They're there to help you through the good days and the dark days. So that's fantastic. You've all got one in place. So it just leaves me to thank you very much for all your questions today. If you want to find out any more about setting up your own business or have any other questions, please visit our website, which is www.mooreandsmalley.co.uk. We've got lots of information on there, including an insight area with loads of videos and blogs, including things about QuickBooks software itself. And any further questions, if you want to email me direct or my team, it's digitalsolutions@mooreandsmalley.co.uk. Coming up on Ask the Expert tomorrow is a business strategist and all-round disruptor, Keaton McWarner, who is the founder of Enterprise Lab. Tune in to get the advice on how to become the best version of yourself to succeed in life and in business. Just a final reminder that if you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. Thank you very much for watching. Have a great day.